This is Mark Anthony with Mercury Time Price Analytics, and welcome to our end of day video update for Tuesday, August 11th. If you're into technical analysis, if you're a chart geek like me, bookmark this video, share it with a friend. We're going to take you step by step through what we've seen over the last 2 weeks that is starting to culminate in some very violent activity in the market. And I'm telling you that this is the most dangerous setup that I have ever seen. Now, that does not mean that the market's going to drop 100, 200 handles. The problem right now is the market is confused, not traders. I mean, naturally, if you're trying to trade this thing, you're confused. I'm confused. Everybody's confused. I'm going to try and put together some evidentiary charts that will make sense out of some of this. But the reason I say the market itself is confused is because this market has no idea whether it wants the next 100 handles to be up or down, or 200 handles for that matter. What you see on the screen right now, this is live as we're recording this, 8:30 p.m. Eastern Time on Tuesday, the 11th. We're going to come back to this. We're going to talk about how we identified last night before the market opened that 33.7920 was a key level. And we're also going to show you why we identified the most important number on the board as 33.1928. We identified that yesterday as the most important number on the board before Globex opened last night. And we're going to show you this again in a little bit, but this is the Mercury bands data sheet that we released to our members last night, right here, key level 33.1928. This is serious business, and I look at most things through the prism of how can I make a joke. If you like watching MASH, I'm Hawkeye. Everything that comes into my brain gets filtered through how can I make a joke. So I like to keep this light a little bit. This particular algorithm I called the SRV algo. And the reason I called it SRV is I named it in honor of Stevie Ray Vaughan. There's nothing about this algorithm that resembles Stevie Ray Vaughan. I just love Stevie Ray Vaughan, so this is the SRV pivot, all right? I'm just a redneck from Florida. Love Stevie. Let's get back to the reason you watch this. So we're going to start at the beginning. And for once, I think I've got these chart images in logical order. All right, here's NASDAQ. This is Friday, July 30th. Now, take a picture in your mind of this action late Thursday and then Friday. And oh, by the way, the Mercury bands called the top in NQ also. Now, this may not be the top. You could certainly go higher or lower, because the point of these videos is not to get you all bulled up or all bared up. It's to prepare you for what we're seeing algorithmically so that you can make some sense of this tape and hopefully make some money. But the same algorithm that called last night's top literally to the tick called the top in NQ as well. Now, it went higher than this. I'm going to show you another chart in a minute. But what I want you to take notice of is this action here, okay? Straight up, straight down. That was Friday, the 30th of July. Next chart. Looks almost the same, doesn't it? This was a week later than the chart we just showed. This is Friday a couple of days ago. Friday the 7th. Vertical move up into our Mercury band and plop. On our website, if you haven't been to our website, not to get off the subject, but it's mercurysignals.com. There's a statement on here that made me uncomfortable when I wrote it, and that is the statement that this is quite simply the most accurate algorithmic system available for individual traders. You will not find anything that does this stuff outside of a very, very expensive institutional algorithm. And when we built this site back in December, I was uncomfortable with that statement. We're not here to brag, but we felt that we had to differentiate ourselves from everybody else by making a bold statement. Because look, here's the thing. There are tons of trading systems that are absolute garbage. And some of them are very expensive garbage. We have one of the lowest priced systems out there. And I often think it's too low because people look at what we charge and they're like, pfft. We do that for a reason, because this was built for people like you and me, average traders that want to have the same edge as the institutional algorithms that are trying to take your money. Simple as that. Trading is a blood sport in the sense that they're trying to take your money. It's as simple as that. And by the way, before I forget, take a few minutes, go to our website, mercurysignals.com. Click on Market Reports. And take 10 minutes and read the report that I posted on Saturday. It's called Green Grass and High Tides Forever. I mentioned Stevie Ray Vaughan a minute ago. I like to have a little bit of fun with these article names, and most of the articles have song lyrics in the beginning to tie in with the theme. And there you go, Green Grass and High Tides Forever, performed by the Outlaws, and written by the amazingly talented Huey Thomason. But read this article. I got to do something about these pop-ups. Forgive me. I mean, they're not supposed to pop up on every page, and they do, so we'll fix it. Go through this and take a look at it. It will blow you away. MercurySignals.com. Click on the market reports. One other bit of housekeeping before I forget. If you want to get in touch with me, our website's MercurySignals.com. On Twitter, MC2085. Email markanthony@mercurysignals.com. Okay, back to your regularly scheduled programming. So we looked at the chart from July 31st, NQ. Pop and drop, pump and dump, whatever. This is what algos do. This is last Friday. That is not healthy behavior. And we're going to talk about the semiconductor index in a minute, which will corroborate the fact that they want you to believe that any pullback in the market, it's just because those 5 big tech stocks, Apple, Amazon, Microsoft, Facebook, and Google, it's just because those 5 need a rest. That's bull. That's absolute bull. Don't be lulled into that. Look, this market can go up 100 handles from where it is right now, and it can drop 100 handles just as fast. So don't be lulled into this nonsense they're trying to sell you, that the market just needs a little pause, it just needs a little time for those 5 big tech stocks to pull back. That's garbage. It's garbage. All right, next chart. I'm going to show you 2 charts that show algorithmically why this market is so dangerous. Algorithms, when they're properly built, are anchored to time and not price. If you've ever read or studied anything by W.D. Gann, I wish he were alive to see this. I really do. And God bless W.D. Gann, because there will only be one W.D. Gann. The stuff that you see on here is with the aid of computer algorithms I built. He did everything with a piece of graph paper, a pencil, and a ruler. And if you go back and look at some of his stuff, it'll look just like this. Now I've got to say this. I've known of Gann for many, many years, and for whatever reason, there was this little voice in my head that told me not to study his work, and I can never figure out why. When these algorithms began, when I started building these back in March of 2019, I didn't want to look at anybody else's research because I didn't want to borrow any ideas. I didn't want to be influenced from it. After this was all done, I went back and dug really, really deep in W.D. Gann. I mean, stuff that you can only get from his family publishing company, which is wdgann.com. If you ever buy any of W.D. Gann's materials, do not buy it on any website other than Gann's family website, wdgann.com. I don't make any money on that. They don't know me. It's just that if you are getting stuff from the legend, make sure it is from the legend and not some knockoff crap that's on the internet. But what you see here is not price compression. This is algorithmic time price compression. Does this look compressed to you? It's all over the flipping place, all over the place. But algorithmically, right here, you have tremendous compression. All these algorithms bunched together in what I call an algorithmic cluster. And when those clusters occur, you have no idea whether they're going to break really hard down, like they did here and here, or they're going to break really hard up. You don't know. So you just have to wait and see which direction it wants to emerge from. Show you another example of this. Now, I mentioned earlier, this is the most dangerous tape I've ever seen. All right, here you have these algorithmic clusters. Now, this isn't over a 2, 3, 4 week period. This is over a 4-day period at the end of July. 1, 2, 3, 4. Sounds like the count from Sesame Street, right? 1, 2, 3, 4, 5, 6, 7 algorithmic compressions. See, I mean, I've never seen that happen in 4 days. This market doesn't know what it wants to do. Does it want to go straight up? Does it want to have a healthy correction? Does it want to go straight up, straight down, straight up? This is 4 days, gang. 4 days. Now, let me just stop right there and say this. I don't care if you've been trading for 1,000,000 years. In this tape, you have to reduce your position size. You have to take incremental profits early and move your stop to even, period. You cannot get stubborn long or stubborn short in this tape. I mean, because this is what it'll do. You see this kind of action, and then it consolidates a little and goes here. And then the next time it comes up and does one of these, you think it's going to come back down here, and boom. Well, you can't be stubborn short here any more than you can be stubborn long here when it broke that way. Okay? So always be mindful of your risk. Reduce your position sizes. Take small incremental profits. It's the only way you can trade this thing. So that is what algorithmic compression looks like. And again, you see this crazy, crazy movement. If I took all these algos off the chart, you would say that is big time volatile. It's not the way the institutional algos see it. It's not the way any good algorithm sees it. Algorithms see these things as compressions of the formula of time and price. Price in and of itself is relatively unimportant in trading, okay? One of the things we've been getting a lot of retweets and a lot of feedback about are these algorithmic regression lines. And these things blow me away. Here, and let me just say this: if you go into your brokerage platform, almost all of them are going to have something that's called a regression line. Absolutely nothing to do with. I have no idea what those things are, what they're built on, or what they're supposed to do. Don't have a clue. What I call an algorithmic regression line, and I don't know if Gann used the same term, but they do the same thing. See, here's what happens when most people draw, for example, trend lines. They'll take the trend lines and they'll just connect the tippy tops and the bottoms. That does you no good whatsoever. What an algorithmic regression line is supposed to do is do two things. It's supposed to cut right through the price congestion zones and then show you where price is going to release if it decides to release out of that congestion pattern, either higher or lower. Now, I took the screenshot last night at 9:33 p.m. You came down here to this regression line, and what these regression lines will do is they'll either completely repel price back in the other direction, or you get these areas where it just fights over it. And this upper regression line, 1, 2, I'm not going to do the count from Sesame Street thing. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 times it went up into this regression line. and this last time it broke. Now, here's the thing about these regression lines. If you like playing potential reversals, this is the only high probability way that I know of to do it. Because when you try to play a reversal, meaning price comes up into one of these and you're getting short to play for reversal, the beauty of the regression lines is you get very quick feedback of when you're wrong. So if you were trying to short this last night up into 33.58, and I did, I had to stop right on the other side. I was wrong. Cost me a couple of handles. But you get very quick feedback, so you can put a tight stop on the other side of the regression line. Now, after it went through, and this is really cool, when it went through the regression line here, it went 8 handles higher. When it went through the regression line here, it went 8 handles higher. When it went through this regression line last night, at first it went 8 handles through, came back down below, and then, look, the institutional algos know where to support this thing. They came in, and when it broke, and right around the European Open, boom, and cranked that thing up to 33.79. I'm going to show you a picture of what this looks like after it went up, because what you got is one of these things I call an algo hook. We're going to talk about that in just a few minutes. But just conceptually, I want to share with you what these regression lines are designed to do. In a lot of my videos, I mentioned the fact that you can't build trading systems anchored to price. That's why most trading systems are garbage. Look, price is linear, okay? Price starts at 0 and hypothetically goes to infinity. How do you anchor something repeatable to something that goes from 0 to infinity? You can't. If they're not, look, they make these systems and they'll curve fit them to some historical period so that they can say, well, these are our results over a 6-month, 12-month period, because they built their system around that, whatever that time period they were using. That's what I mean by curve fitting. Well, it's not repeatable. It's not repeatable. What these regression lines are is a linear expression of time. Everybody thinks of time as circular on a clock, and it is. But time is also linear. You know, you can go on Netflix or Amazon Prime, and there are a ton of videos about cosmology, about the planets, about space. If time is circular, then how can the universe be constantly expanding? I mean, Einstein's theories were about space-time, right? How can time be circular if the universe is still expanding? Figure that one out. So time is both circular and linear. Gann talked about a square and a circle and a triangle, and you put those all together, and that gives you an idea how things really work. But what these regression lines are is they are a linear expression of time, predominantly, and to a certain degree, time and price. And what all that gobbledygook means is this, is price will continue to return to these regression lines until they get so high that they're gone forever and price is never coming back. But until that point, price will fight over them. Now, here's what the institutional algorithms are designed to do. Price comes up here again, 1, 2, 3, 4, 5, 6, 7, 8, 9 times. So after you see this, even if you use algorithms like I do, eventually, you play these reversals. And then they'll give you one of these. And then I call it an algorithmic hook, and boom, well, that's what you had today. You had this go way above, went more than those 8 handles that we saw here and here. And it took off, and it sucked everybody in. They suck in all the momentum traders, and that thing really gets going. And just at the point that all the momentum traders think the upside is secure, boom, they take it right back down. And this is, I believe, that I posted this last night. This was posted on Twitter last night. I believe this is the target where these came together. Now you take, and they're going to start to pull apart, but you take this level where they came together, which eyeballing it is about 33.11. You watch 33.11. I'm not saying it's going to break, but there's going to be a big time, very important retest of 33.11 sometime probably in the near future. So let's move on. And that was chart 1, 2, 3, 4, 5. Yep. Okay. Chart 6. All right. So here's what happened after that. You came up here last night into 33.60. Now we put this level out to our members a couple of days ago. XSV2 pivot. 33.60, 350. And I mentioned a couple of days ago to our members, this was going to be the big deal. If they take this out, this is where the squeeze exists. Above that, the squeeze goes vertical. And so that's why when I took a shot trying to short this, I had my stop just a little bit above 33.60 because it would have been silly to put a stop above 63 because once it took out 63, then it's gone. And then you did 79. So that's what happened going into the morning. And it doesn't get any more accurate than that. It's to the tick. Now, our algorithms output the data to 2 decimals. So in this case, it was 33.7920. I know ES doesn't trade at 20 cents, right? It's 25, 50, 75. There's 4 ticks between every handle. So take a mental picture of this. Break the regression line, boom, up there into 33.7920. And now we're here. Now, remember in the beginning, I mentioned that I always felt uncomfortable with the fact that we put this statement at the top of our website. Oh, go back, you moron. It's on my administrative part of the site. I mentioned that I've always felt uncomfortable with this. We wanted to make a point that these are the most accurate algorithms you can get. And I don't think anything the institutions have is anywhere close to this either, quite frankly, because we have had many, many offers to buy parts of this. It's not for sale. And here's the point. The range today was 33, mark this point in the tape. The range today was 33.79 to 33.19. We put out last night before the market opened the key spaces to watch if it got above 63.50. The Mercury band at 33.7920. And also, and again, this is exactly what we gave to our members last night. This was the key level to the downside, 33.19. See if we can go back to the right one. There we, no, come on, man. There you go. All right. So you had a 60 handle trading range. And the algorithms that we put out last night and the levels we told our members to watch, if it takes out 63.50, this is where it's going. Our algorithm nailed a 60 handle range, nailing the high and the low to within less than 1 tick. Not one handle. Not one handle. 1 tick. So the next time somebody tries to sell you some fancy trading system, or they want to sell you some fancy software, remember this chart right here. We charge less than just about anybody out there for a trading system. And it does everything that the multi-million-dollar institutional systems do and more. And if you watched a couple of our videos before, you probably thought the first time you watched one of these videos, this dude's nuts. And then you watch another video and another video and another video, and you see these charts every single day. Go to my Twitter feed. Every single day this system does this. This is why we've had multiple offers to buy it. This is why our servers have hack attempts almost every day. Almost every day. The security that we have had to put in place is crazy, but I'm getting off the subject. So can you see how dangerous this tape is now? One or two more screenshots, and then I want to go back to that live chart. Which one are we on here? By the way, our daily algo bull bear pivot today, we put this out about an hour and a half for our members before the market opens. That is the single most important price on the board. Another thing I wanted to note on this chart is when we put these algos out, this one here, this XSV6 at 53.50, this goes back to February 5th. The S&P fought over this level big time back on February 5th. And when it came back to it, look how many times it fought over it again. 1, 2, 3, 4, 5. Looking at the little bubbles. 6, 7, 8, 9. And then it broke. I guess 10 times the charm. I just noticed that. Just like on the regression line, 9 times into it and the 10th one broke. That's interesting. I'm going to have to see. And I just made 2 hours of additional work for myself just by stumbling upon that. Hang on. Not right now. Not right now. Doing a video. All right. So back to this. I want to wrap this video up soon. This was the semiconductor index that I was talking about earlier. This chart I put out today, this was taken 11:05, and this makes the point that I was talking about earlier, that time is more important than price. Here's what I mean. Here's July 31st, and you get the low on July 31st at 163.89. It found support at this white dotted algo. Now, today, it came down, went through this same algo, came down to the orange one, but it didn't come down to this price. And the point I made is this. Even though the midday low in the semiconductor index was 3 1/4 handles higher than here, this low, technically, algorithmically, it was in a weaker position here. Okay, let that sink in for a minute. Price finds support here, midday, 3 1/2 handles higher than the Friday the 31st low. Yet, my point was that it was in a weaker technical algorithmic position here than here. Okay, that was this morning. Now, let's look at how the semis closed the day. They closed down here below 167. This chart I put out earlier, it found a high in here, went back up, and then finished poorly. Now, the other thing to note about the semis, if you're wondering where they might be going, right here is your target. Back here on the 24th, you had a bullseye, a direct hit right here at 157.23, and that occurred after you broke the orange algo. So likely this is where it's going back to, and this is moving pretty slow. So I mean that number is going to change over the next day, 2 days, but you know, just ballpark 164.80. You might get a little bit of a trading low, and it could go lower than that. But that is the next target. All right, so let's finish up back where we started. A couple things to point out. Now, since we started this video, right when we started the video, ES traded up here to 42. We're now back down to 27, and we're down into what? Another regression line. Okay, So this is what they do, folks. This is what they do. You had this thing go to 33, from 33 to 43, boom. And what'd they do? Splat. 10 handles up, 15 handles down, 16 handles down. So with that, and it's only 9 o'clock. I mean, what's typically been happening in this tape is if it did want to come down lower, it usually hasn't been happening until later in the evening. So I'm going to wrap up this video here quickly because we may have a little fireworks tonight. What I wanted to point out on this last chart, I mentioned the high earlier at 79.20. This is where our automated algo triggered short. Because look, you don't need to be a rocket surgeon to use this system. We've built a graphical interface that's very, very easy to use. We've got videos for our members that show how to use it. It's real simple. This was the trigger. But what I want to point out to you was the technical damage that was done today. You broke through, here it is, today's opening print, 68.25. You broke today's opening print. And then you came down here, and this is what's really ugly about this action. You come down here, it bounces back up to the daily bull bear pivot at 61. Now, I had walked away from the desk right when this happened. So when I came back to my desk, it was trading down here. And what I did was, instead of trying to short this in the hole, I waited to see if it was going to get price acceptance back above the daily bull bear pivot. It didn't, and I got short 59. Now, you know, if you look at the way this thing's been trading lately, if you shorted this market anytime recently, we're talking about 33.59. If you shorted this market anytime recently, 20 handles off the high for the day, they were going to whip it back around straight up and just run you over. But when you have these algorithms and you can see all this, that was a very safe entry at 59. And by the way, I woke up a little after 5 o'clock this morning, and that little voice in my head said, there's a trade setting up. I was short at 78.50. And actually, you can see this on, I don't normally show this on our videos, but I want to show it to you. Here you go, because these are all timestamped, folks. 5:22, I said 78. 5:22 a.m. Short entry, 33.77.50. Pretty good, huh? That trade, now, I'm trading more than one contract. So I take those contracts off in steps, booking some profit along the way, and it shows +8 on the first third, +8 on the middle. This was a 4 lot, so had two, quote unquote, 2 middles. 8 on the middle, the first middle, 10.5 on the next middle, and then took profits at 33.64. So at 14 on the runner, we call the last piece that you're holding the runner. 14.5 on the runner, 45 on the trade. Now, late in the day, here you go. Where is this, Mark? And I tried one at 69 and got stopped out. In 4 handles, I rarely put a stop that wide. It's usually 2 or 3 at the most. And I got disgusted after that one. That's why I was away from my desk. I had to go for a walk. But, you know, it gave another opportunity. So here's a short entry. I mentioned it on the mic on our live chart to subscribers, like 303, I think. Typed it in here. Short 59.50. And again, you have to take incremental profits quickly to reduce your risk. So +4 on the first third, +7 on the middle, +14. And then I took this off at 39. And what I said on the mic at the time to our members, I said, look, I'm taking this position off right now. It was 45 handles on a trade when I'd already booked 45 handles on this first trade here. So I told our members on the mic, I said, look, I'm taking this off right now. That's 90 handles on those two trades. I said, but there's really no reason to get out of this. It hasn't proven that it wants to go higher yet. And, you see what happened. Right down here into the SRV pivot. It's not on this chart. We have certain indicators on the ES front month contract and certain indicators on the ES continuous contract, and this is where you can see, where are you, Stevie? Here we go, 33.19.28. That was on there since last night. All right, I'm going to wrap. This video went way longer than I thought. We are running a special right now on our website. It's $40 off. We bill every 2 weeks, not every month. So if you want to try out our service, you're committing to a whopping 2 weeks. If you want to try out our service, we're running a special. I don't know if we're going to continue this past the end of this week. You go to the checkout page, you put in promo code 40 at the bottom left-hand corner of the checkout page. That'll take $40 off the rate. And I'm not going to mention on here what it is, but you can try out our service for 2 weeks for a little more than one ES handle. The E-mini is $50 a handle, right? I'm not talking about the micro, it's $5 a handle. The mini is $50 for a little more than one handle. The price of one handle. You can try out our service for 2 weeks. And by the way, we don't a la carte any of this. Everything is included. Everything that I showed you is included. This is just an example of one of the live charts. There's a couple of them that we offer for our members. But everything that you ever hear me talk about on these videos is one price. And there are no contracts. If you don't like it, 2 weeks, you're out if you so choose. But there are no contracts, and we give you a lifetime rate lock. So as prices go up in the future, I believe they're planning on a rate increase. What's today, the 11th, either mid-month or the end of the month. I don't get involved in setting the rates for this system, even though I built it, and here's why. I don't want to go on a video. I don't like when people say, you ought to do this now because the rates are going up tomorrow. I literally do not know. I literally don't know. They're going to be a rate increase at the end of this week. I have no clue. The members of my family who make that decision, I have asked them, do not tell me. I do not want to know. So, because I don't want to make any promises that try our system now because the rates are going up. I literally do not know. All right. So I want to thank you for taking 38 minutes of your time to watch this video. Whether you're a new trader, an experienced trader, or anywhere in between, I'm telling you, my friends, please be careful. This tape literally does not know whether it wants the next 100 handles to be up or down, or how quickly that's going to happen. So please be careful. If you want to get in touch with me, again, you can find me on Twitter, MC2085, or just search Mercury Time Price Analytics or Mark Anthony on the website, or email me, easy for you to say, email me at markanthony@mercurysignals.com. As always, thank you so much for your time. God bless you. God bless your family. And we hope to see you again real soon.